Sorry, we had some issues yesterday with the live trading room. A lot of people were not able to join, so I apologize for that. All right, let me just review the pre-market positions, and we will start shortly. All right, so AMD is down 5%. If you have short puts, you probably want to put pre-market order to close the short puts. They're still way out of the money, so it makes sense to try to close them. 150, it's trading 163, still 10% away. So that's AMD. Boeing is up 2%. So if you have calls, I mean, they're way out of the money too. I would try to close them. $205. Have 217, 12, 4, 5%. Microsoft, I mean, it's flat for now, so Microsoft. And Starbucks is moving higher. So it's trading at 99. Let's track 99, 103 call, 25 cents. So I would put an order to close the short call, 103 or 104, depends when we did. I think we did 103, and that's about it. That's about it. Okay. Mark. So sell today. Okay, we'll go over, Ricardo. We'll go over, remind me, we'll go over the Apple earnings. Bob present. Good morning, Fred. John is present. All right. Oh, good. So we have a lot more people today than yesterday. So I was a little bit concerned that I said something, but well, okay, good. So it's just technical difficulties. So let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. Hello or hi first. Please try to participate in on Discord. On Discord, you can type in Lady Godiva, Teresa, welcome back. I'm glad you were able to make it. Just type in inside of stream chat, just say hi, or what do we think about AMD or Google or Microsoft or Amazon, right? A lot of earnings. So welcome back, everybody else. Really appreciate your time. Yesterday we had some technical issues. I couldn't sleep all night figuring out why half of the people didn't show up. But now I realize that GoToWebinar had issues. So I really appreciate your time. That means a lot to me. I've been managing my own money for over 20 years, have a lot of technology background, options, stocks, and managing my own money. That's kind of my background. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit the link on your site, optionscreening.com, to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA. I'm showing you what I do in my own account, based on my own risk tolerance level for general education and information purposes only. Trading psychology is important, right? We're approaching pretty big events, right? So every kind of probably, I mean, it's not a Super Bowl, because Super Bowl is once a year. Fed speaks more often than once a year, but it's a pretty big event, especially as we approach in January. End of January, February. This is usually the window when the market, if market is going to pull back, this is where it could pull back, right? It's today, Fed decision. Are we cutting interest rates in May? Are we cutting interest in March, right? The debate is still going on, or are we not cutting the first half, right? Based on what he says, market will move. And then we have unemployment numbers on Friday, and then, we're still waiting for Apple, Microsoft, Apple and Amazon to announce earnings. So there's always uncertainty in the market. Market is overextended, but, if everybody believes we are in a soft landing, market will continue to rally, especially if interest rates drop, or if interest rates rebound and we get disappointing news from AMD and Google, potentially market can pull back further. So how do you deal with that uncertainty? I propose to always write down your trades, grade yourself, right? A, B, if you follow your trading plan and you did not risk more than 2.5%, right? If your position was never down more than 2.5%, I would give you, if you hold it overnight, day trading 1%. So if you find that threshold and position never went below that threshold, I would give myself A and B. That's what I do. If at some point it was below my threshold, I would put C or D, right? Sometimes I get lucky and sometimes not so lucky. So then I would grade myself C or D. And the idea is to have A's and B's, right? How do you make sure? And right now I would be market neutral, right? I would have, most people are bullish. So if you're very bullish, I would have 3 bullish positions and 1 bearish, right? 1 hedge, 3 bullish positions. That would be my proposal. Personally, I have 2 bullish, 2 bearish positions. And then how do you make sure you don't have more than 2.5% at risk? You look at the tools, right? So, sorry about that. So I would look at Stock Forecast Toolbox. Basically, model is neutral, right? Basically, it says 493 is overhead resistance, based on the flow, dealer flow, right? We started looking at option flow. 500. There's a lot of call activity at a 500 level, 5,000. So any positive news, and we're there, right? 493, and by end of the week, if we are at 5,000 or 500, I would not be surprised. Any negative news, the first line of defense is 489, maybe 487, right? So that's what I would look. Today, model sees 493, 489. Obviously, it doesn't know that there's a Fed decision, nor is it being trained on what Powell says. It doesn't decipher his language. Some models do, not ours. But so you could get outside of this range pretty quickly, right after the Powell speaks. If you extend it over 6 months, 488, right? We've seen where the market sometimes. Today is the end of the month, so it overshot by a little bit this month. It's still neutral trend. It's still potentially next week we could get to maybe not 446, but 460, 450. That's the risk to the downside, right? To the upside, not a lot of room. Maybe 500, maybe 510, but the room is getting thinner and thinner. So that's what I would look at. And in terms of the risk, right, for today, if you look at the 1 hour, 10-day prediction, I would look at Give me 1 second. I would. So right now we're trading at 488, right? So 487, right? 487, I would be concerned if we drop below 487 today, right? So that would be your stop if you're day trading. If you're doing long-term trading, I would look at the 1 week chart. 487, yeah, 487. The next level would be 482, right? 482 or 478, probably more, the breakout level. So it's important for the bulls to hold on to 487 level, right? If you do see the market dropping below 487, the next level of support would be 480, right? 480, that's the long-term support that's more likely to hold, right? So if you're bullish, I would consider going long at 480 if the market drops, And then, you do have to analyze the data. Going into the event, obviously, we did have inflation data from Germany and from France. Europe, economy is kind of contracting, and there is a big disinflationary force, and the idea that ECB will cut rates sooner than anticipated. So the rates have dropped significantly, right? We talked about short-term 4.08. Right, it dropped, so it's basically retracing all of the gains. Dollar for now is also a little bit lower, but it's kind of still trading in the range. But the yield dropped significantly, even though we did have Treasury quarterly rebalancing, right? That everybody talks about QTR, right? And QTR, they announced that they're going to have a record auctions in 2 to 5 year Treasury notes, which people are concerned about liquidity, but for now that's kind of on the back burner. 10-year yield big drop to the downside. QQQ is also dropping to the downside. We kind of talked about what's going on with this correlation in the past months, right? Where people are, buying Treasury, right? People were buying treasuries, right? People are buying treasuries and they're buying technology. That doesn't make sense, right? Sorry, in the beginning of the year, vice versa. Sorry. So from the beginning of the year, people were selling treasuries, right? People were selling treasuries, right? And they were buying technology, right? Which was not the correlation in the past 2 years, right? Today, kind of the same thing. People are buying treasuries, but they sell in technology, right, on earnings. That doesn't make sense. I mean, granted, there are, a little bit misses on the earnings, but, that's something to keep an eye on. If that correlation stays, and now we're in a new regime, right? Recession. We don't care about inflation as much. We care about recession a little bit more. All right, so let's go over the positions. The most important right now is Starbucks. So I did sell to open 1 of 5 calls. So now I have to manage 1 of 5 call. Let's do that. For now, it's 97.90. So it's still out of the money. So let's look at that. Okay, so Starbucks. Okay, so I trimmed it. Okay, Starbucks out, Boeing calls out. So let me look at AMD. AMD is 165. Okay, so I'm out of AMD puts. So that's good. Out of AMD puts, and then let's see. Microsoft puts about to expire worthless. Let's see, Microsoft is flat. Google is down 6%. So let me look at Google puts. Google. $138. So I would close Google puts, right? We talked about the skew, and then nobody was hedging Google. So negative surprise, Google is down significantly, right? Even though there was nothing really wrong with the earnings, right? But I'm going to look at the screenshot of dealer flow, and you can see that yesterday nobody was hedging, right? So I encourage you to participate in closing bell. Very important, especially with the dealer flow, right? Right before the announcement, how is everybody positioned, right? And what can you derive from that data? And yesterday we saw, I mean, it's a put skew, still a put skew, normal, but nobody was buying Google puts, right? And that's why I said it makes sense to trade the calendar, right? So let me look at Google. 5 minutes. Looks at Google chart. Okay, so that's Google, Starbucks. Came out of Starbucks, out of Google, out of Microsoft. So AMD was going. Oh, I'm out of AMD as well. Let's look at the AMD. Okay, so we'll go over, just give me 1 second. I have positions in all of these stocks, so I do want to make sure that I don't miss anything. Okay, all right, so let's put in order to close Starbucks. So AMD down 4%, Google down 5%, Microsoft is up 1.5%, Starbucks is up 3.5%, and Boeing up 3%. All right, so General Motors. Okay, let's see. So I need to free up some buying power. So let me close the General Motors put. That is expiring worthless, but tying up buying power. And then let me close Starbucks. Starbucks. 105 call, 4 cents. Let's close that. So that's good trade. Right? Good trade. We'll go over it now. Collected about 0.5%. So that's good. Okay, let me just review my position, make sure I don't miss anything. Yeah. So QQQ 430, 420 put spread is up actually significantly. I would maybe, because I have 2 contracts, maybe before the earnings I'm going to close and then issue market on close. Close limit credit 5. Oh, should I wait? fine. We'll wait. It's making money. All right. I didn't miss anything else. Okay. And then we'll close the short put to free up the buying power. Okay. So let's look at dealer flow, right? I'm going to go back to my spreadsheet, start looking at exactly what happened, and does this have merit? Because this is something new that I started looking, but I think it has a lot of merit. So let's analyze now that I'm out of some of these trades and see if all right, so hold on a second, where is this? Okay, so a perfect example was AMD, right? Let's go over AMD first. How the AMD looked yesterday in terms of dealer flow, right? So this is the picture from yesterday, right? AMD. What do you see in AMD? Two important pieces of information. One is this, and I hope you guys can see it. I don't know if I can zoom in. Is there a view? Zoom in. Command plus. So there are two important information. One is the weighted eye volatility skew, right? And forget about the complicated concepts, right? I was thinking about how to say that, but this gamma, right? It sounds very complicated, right? But so does second derivatives, right? They sound complicated, but we use them every day, right? I.e., your car, right? When you press your accelerator, right? When you don't press an accelerator and you're driving 60 miles an hour, well, acceleration is 0. Gamma is 0. You start pressing the accelerator, the rate of change of velocity increases. You go from 60, 65, 70, 75. The harder you press, the faster you move, right? So gamma is your pedal, right? It's your accelerator. The higher the gamma, the certain strikes, somebody's pressing the accelerator, right? This Vanna exposure, same thing. It's the rate. It's just, it's just like gamma, right? But it's a change of delta, not versus stock, but versus volatility, right? So same thing. It's just like a special accelerator. Think of it, accelerator that's sensitive to some other first derivative, right? So I wouldn't be too concerned about mathematical formulas. Obviously, I would research. I would go on the internet and do some research, buy a book and read it. That's what I'm doing. But but we do need to be aware of skews, right? We kind of learned that there is sometimes greater demand for puts or calls. So AMD had a big call skew, right? So the Vanna was negative in the front weeks, right? So negative, right? You see expiration, close to expiration, it's below 0.5. So there was a lot of, and actually further out, a lot of demand, right? Negative skew, which is unusual. Negative skew means people are not buying, people are selling puts and buying calls, right? Every time you see a meme stock or every time you see an AI stock that everybody wants, like AMD, you have front months, you have a big skew. People are hedging with the back end months, right? That's the green, February. But the front months, big skew in 200, a lot of premium, right? So yesterday I said sell to 10 to 15 calls, so that worked out well. And then there is not a lot of, there is some 160, 150 strikes, right? Here there was not a lot of skew. I mean, not a lot of Vanna exposure, minus 500, compared to the calls, minus 1500, but still some Vanna at 160 strike, right? So this is a strike that bulls and bears will fight, right? 160, 165. Guess what? AMD is 160, 165, right? So that's one example. Actually, let me just close my puts. So hedging makes sense on AMD. So let's see, AMD. Let's see how's the market doing. it's down, well, QQQ is down a little bit over 1%, but Spider's down only 0.5%, right? So people are still buying value stocks. Okay. So that's an important price point, right? The analogy is again like warfare, right? We're talking about trenches, support and resistance. On technical analysis, right? You look at support and resistance and it tells you. But traditional technical analysis is backward looking, right? Neural network, right? Like is forward looking, and then implied volatility, demand for options into the future can give you guidelines where the fight is going to be. So this is what we're going to see. Right now, even though it's negative Vena, you have to be careful, right? Because the negative Vena usually acts as a magnet. So that's why people are fighting for 160, 165 strike. But if you break through these, but there's a lot of support, right? 150. If you get below 150, then instead of a magnet with negative Vena, right? Because the cold skew, it might act as a repellent. Probably not in AMD because such a desired name, but nonetheless, it gives you some guidelines. Better example, not better, but different example was, different example was Google, right? If you were at the closing bell yesterday, which I encourage you to start participating, right? If you join Elite Service, 30 days, you get your money back, but the closing bell is important. You can watch the recording, but you're going to get a lot of useful information. Now look at AMD chart, right? Sorry, Google chart. Before the announcement, right? Same thing. These are the front weeklies, right? This Friday, next Friday, and these are the back end, the monthly expiration. So notice the red line, it's flat, right? There's a little spike. First of all, positive Vena, unlike negative, it's positive, right? Because we are above 50 line, right? Most of the people, in front months expiration are buying puts and selling calls, right? Going to the event, right? But there were selling calls against their position. So there were a relatively large volume of selling calls against their position, but very few people. There was almost no open interest, right? These are the strikes, and the open interest at those strikes was pretty much flat, right? What does it mean? Look at yesterday's recording. I basically said, listen, I did sell the calls, but I said that since nobody is buying puts, right? Since nobody's buying puts, what does it mean? Puts are cheap. It makes sense to do calendar spread, right? So I sold, what did I sell? My page is not loading. Hello. Oops. Give me a second. Sorry, my browser just died. Looks like you guys can still hear me and see. Okay, browser's there. Okay. So Google basically, if you look at the recording, right, from yesterday, view, zoom in. Basically, there were no put activity. What does it mean? It's an opportunity to, at least if you're selling puts, to buy the hedges, right? So what I did is I bought 136 put that expires next Friday, right, calendar spread. I bought the put that expires next Friday, but I sold the front put, 138 put. So at this point, I closed the 138 put and I still have 136 put. And because I know there is no put activity prior to earnings, you had ample opportunity to sell short the stock, right? To hedge your short put. So that's, I think it's a good example of how the dealer flow information can help you prepare for the earnings and know where bulls and bears are going to meet. Right. So those are good examples from yesterday. Let's review the positions. Sorry, let's review the market. Good morning, Fred. John, good morning. So AMD is bouncing back. So it does act, this 165 strike, it gravitates, but acts as a repellent too, right? So either repels to the upside or repels to the downside. But, at this point, Google is still down almost 7%, continues to deteriorate. Microsoft flat. Starbucks is actually flat, pulled back. And Boeing. And Boeing is up 4%. Okay. And then let's see, Google doesn't look like it's bouncing. Yeah, it looks like it continues to deteriorate. Okay. Any questions on that? All right, let's go over the questions. So, so this dealer flow is very important information. Again, if you're interested in using this tool, I encourage you to do that. Some of you ask, how do you get this? We do have an offer, right? If you sign up for Earnings Power Trader and you sign up for Trade Deer account, right? Chicago brokerage. They have presence in Chicago. I think headquarters in different, but anyway, and $10 a month basically, and you get free commissions on options trade, right? So you don't get paid per contract. It's a flat fee, $10. So it's a great deal, right? So if you're in options trading, this is something you want to consider, purchasing where you have this deal. Obviously, as of right now, if you look at AMD, this Vanna flow looks completely different. No, it's actually still negative. Surprisingly, it hasn't flipped yet. What about Google? Yeah, no, Google is still so. Google flipped. Right now, Vanna is negative in front months. A lot of negative Vanna skew, right? And AMD actually, AMD is still negative, right? So a lot of negative, right? And now strikes 160. So there's a lot of volume at 160 at AMD. Negative that meaning that IE people are buying 160 call now. Okay. Any questions? So Ricardo had Apple earnings. Apple earnings. So Apple earnings are on, let's see, late today. Apple or tomorrow. Okay, so Apple is today, right? Apple and Amazon. So if I have to guess, they both have positive skew and positive VANA, right? Put skew, so meaning put skew and positive VANA. Let's confirm that, right? Because they're popular stock. I mean, it did drop today in sympathy, but we'll see. And again, this chain picture will change, right? Because there is a lot of positions, especially after the Fed decision, you're going to have repositioning. So I won't assume that this data is going to change, not going to change. So that's why prior to closing, you want to look at this one more time, right? So let's look at Apple and see, you know, what we see. So Apple, this right? Microsoft. All right, so Microsoft is positive VANA and Apple is, okay, positive, right? So Apple is positive VANA, right? And we have a put skew. What does that mean? People are buying puts, right? So there are a lot of concentration in terms of puts at 180, right? And 175, right? And then more at 170. Apple usually can move, you know, outside the range. So let's look at what the puts are worth on Apple. Like outside of that range. And again, I wouldn't do the trade until after the Fed decision, right? Because you expect more volatility. But at least as of right now, there's some demand at 170 strike. It tapers off at 170, 165. So if you sell 165 put, not a lot of premium, right? Only 8 cents. So to get to at least 20 basis points, VANA is, let's see, 170. So same thing. I would be probably be buying a put because you have to sell 172 and a half. Well, actually, to get at least 20 basis points, you have to sell 175 put, right? So because a lot of people are buying basically puts, so you don't get a lot of premium outside of that. Calls, on the other hand, a lot more people are buying calls, right? So let's look, how much is Apple usually moves? Not usually, but 2 standard deviation. So anywhere from 6 to 10%, right? So Apple 6 to 10%, it's $18, right? $185 stock, 6%, at least, well, 10% is 18, 6% would be 9. So 9 plus 185 is, I mean, 205. So there's 200 strike, there's 202 strike, there's 205 strike. There are a lot of call skews, right? So puts, not a lot of premium, but calls, you know, 10% would be $18. So that's what? 203, right? So I'm more prone to also not a lot of no premium. Okay, 200 calls. 29. So 197. To get 30 basis points, you have to go to 190, at least as of right now, to 195 call, which is only 4 or 5%. So most people don't think we're going to have a lot of move outside of the range, right? So volatility, at least in puts and calls, at least for now, is compressed. That is an invitation for positive and negative surprise, right? So it makes sense to probably buy puts and calls because they're relatively cheap to the historical, right? Implied volatility is a lot less than historical on Apple right now. So, and with the way Google announced earnings, I won't try to sell premium unless it expands towards the end of the day. So that's what I see now. Bob, present, Faust, Fred, good morning. LA Lilly, right, NVO had earnings. So we do have position in LA Lilly. NVO announced earnings and basically said, kind of what we expected, just demand outpaces supply and up and away. Same thing LLY, same thing NVO. So this is good. We're staying long for now. Sorry, not Germany. Japan at not all-time high, but decade high. Looks like new highs, higher lows. That's good. Verizon pulled back a little bit. Not, still clean breakout continues to stay. We continue to stay in long, still above uptrend. CCJ recovering, right? It's off the 50-day moving average. It's again above the breakout level. So for now, it looks good. So the stocks that we still long look pretty good. IWM outperforming the market. Big drop in the regional banks, KRE, right? They were overbought. Big drop, steep drop in KRE. Again, doesn't make sense, right? This is all new to us. It hasn't been like this in 2 years, where the yields are dropping, right? And technology, KRE, getting unhinged, right? And especially with soft landing, right? The soft landing narrative basically are going to say with yield curve steepening, as the yield curve, the front months drops and the back end rises, the main beneficiary should be JP Morgan, right? JP Morgan is #1 beneficiary. It acts like that, but so do regional banks. But for now, I'm not sure exactly what the big drop is. But we are acting as if this is more of a kind of a recession trade, right? People are buying treasuries because they're concerned with, inflation, and they're selling off their QQQ position. That has been the correlation since the beginning of the year. It's now week number 4. If that correlation stays, basically we are in a new wave, right? We're in a new wave where if there are signs of recession, market is going to sell off, right? Or if there are signs of expansion, market is going to rally, right? Thank you, John. Ricardo, SOXL. What is XL? Semiconductors, SMH. Triple, right? I don't like to do leverage, but let's look at SMH. It did pull back on AMD, right? Elevator up, elevator down, right? You want to look at the gamma, right? You do want to look at kind of this gamma squeeze, right? So you have basically like stock like AMD. What happened is, right, and this is a typical trade, right? Everybody wants to own AMD. Everybody wants to own NVIDIA because they're the best thing, right? This is the new wave of artificial intelligence, generative AI. Facebook is buying billions of dollars of these chips. So you have negative venom. What does negative venom mean? It's still negative venom. Even after, you would think it would revert, but still negative venom. What does it mean? You and I and institutions are still selling puts, right? They're selling 160 put, they're selling 150 put, and they're buying 180, 190 call, right? Because they don't believe they want, it's you only live once and to the moon, right? That setup is very susceptible for gamma squeeze, right? For gamma squeeze, where you press an accelerator and you're going up, and then as that accelerator comes down, right? If you let go of the accelerator and you get to 0, you can get negative gamma, right? You're accelerating, but in a different direction. So semiconductors, it broke at least short term, right? At least short term. On the weekly chart, it did break through this line, not a big deal. Obviously, as long as we're above 168, right? As long as we are above 168, I wouldn't really worry about it, right? So let's look at SMH, and let's look at not the front months, not the front weeks. We can look at the front weeks, but let's look at the monthly expiration, February 16 and February 15. That can give us a sense of positioning. So SMH, the yellow is March and green is the front month. So there is a lot of hedges at 170 level, right? So 170 level, and there's a lot of hedges, right? This is a positive data, a lot of put buying, right? You can see a big sharp rally to 0.76. So people are concerned, right? People are concerned. They are buying SMH puts after the AMD, but we are pretty well positioned at 170 strike and 160 strike, right? Yeah, 160, 155. So let's now look at the chart. Yeah, 160, 155 chart, right? So not a lot of hedging up until 160 level, maybe a little bit, right? So this is 160, 170. So there's not a lot of hedging in 170. Looks like front months today it expires, but then you do have some activity in February and March. People are buying aggressively 170 put. So I don't think there is a lot of support till 170, right? So if SMH is going to be at 170, in the next week or two, I would not be surprised, right? What is it? 10% correction, 5% correction, 8% correction. So if it's going to be in a few weeks at 170, I would not be surprised. As of right now, it looks like a low probability that it would break below 170 based on the data flow. So I would be a buyer at 170, at least as of the way the flow looks right now, right? As long as this uptrend is intact, but I would be a buyer into pullbacks, right? We still need to figure out what's going on with the yield, right? Well, I know what's going on with the yield anticipation based on inflation from the Europe and based on the unemployment data, right? We had today what? What do we have today, which is important, blah, blah, blah. Employment cost index, right? Cost of labor continue going down, so that's what drives the market. I mean, obviously not as important as the Fed rate decision. I assume most of this price movement is due to expectation that the Fed will lower interest rates and expectations that in Europe they will lower interest rate even sooner because the immaculate disinflation. Now we just need to reconcile this new notion. Why is QQQ down? Is this just temporary because market is overbought and we had some bad news from AMD and Google, which weren't that bad, right? There was nothing wrong with their earnings. It just potentially they said that number of clicks in the future we might not grow in double digits, but they still beat, right? They beat on the top line and bottom line and had a good forward-looking guidance. So if this is just a short-term divergence, then great. But if this is a new trend where the yield is going to drop precipitously and QQQ is going to drop precipitously, that means fear of recession, right? Fear of recession. Now we're in a new regime. John, LLY, we looked at LLY, right? And Boeing. So in terms of our earnings, Boeing is up 4%, right? So they said that the world is not ending. But they stopped doing forward-looking guidance, right? Bob did say that the stock is overbought. I mean, I like this price action, right? For the past, 2 weeks, we haven't made new lows. We have earnings. I mean, we are still below 50-day moving and 200-day moving average, so it's not the best price pattern in the world. But if you're a long-term investor, maybe this is somewhere you start thinking about buying. But again, if you're going to buy at 207, be ready to buy it at 180, right? Because if if there are signs of recession and they start persisting, then you will have additional pullback. Actually, Starbucks is also a very good example, right? I'm going to share it. I'm like a kid in Candyland, playing with my new toy. So that's good. It's good to be excited. right? Because you guys are awesome. I want to share this. So look at the Starbucks, right? The Vanna, right? Again, the flows, right? Big red at 100 and then big blue at 102, 103. But the biggest volume, the red spike, look at the spike, right? It's huge. Not huge, but comparatively speaking, right? 2200 as opposed to, when it's at 400, right? So pretty large spike at 99. Positive Vanna, put skew. Above 0.5, a lot of put skew. What does that mean? Retail investors like you and I are buying puts into the Starbucks earnings, right? This is a chart from yesterday, and selling a lot of calls at 99. So how useful is this information? Let's look at the chart. It is extremely useful, right? They announcing earnings. I mean, I don't know why the stock is going up, because China is down, their sales are down. I mean, they're still showing some kind of growth, but I mean, it looks like there were a lot of bad data. So it continues to go higher, and notice, what did it stop at 99? Is that magic? No, because if people are selling short the call, right? Selling short the call in large volumes at 99 strike, that means that the dealers have to buy call. If dealers have to buy call, how do they hedge? They sell short the stock, right? So dealers bought the call, right? So as the call approaches 99, what does the caller have to do? They have to decrease their delta, right? Because the delta just jumped significantly. It was 0.10, now it's jumped to 0.5, right? It quadrupled. The delta quadrupled. The gamma made a huge run. They want to stay delta neutral, so it acts as a magnet, and they are selling, right? So the dealers are selling the 99 call, right? They're 99 strike. And the green line, right? The blue line. The green line is the February expiration, but the blue and red line are this week and next week. So, and there's no strikes outside of, well, was one more at 102, right? But the big one, the red one, majority of this was at 99, and that's exactly where it went, and that's exactly where it stayed, right? So it's a very important information, right? It's very important information that you probably can't deduce that just by looking at the Starbucks chart, right? You do have this overhead resistance, right? It is a 200-day moving average, so it coincides, right? It coincides. The technical analysis also coincided into the dealer flow. But I actually, I was thinking about maybe I should start buying stock because I have a short call, right, to hedge buying stock. But I decided I'm going to wait till it breaks above 99, right? It never did, right? Because we had what did we have? Okay, so I'm out on LA Lilly. Got filled in LA Lilly. I'm out 660. On a pullback, I would buy it back. I did close Travelers yesterday, so that was a little bit. But I was concerned about Fed decision, but it did actually rally. That's fine. So 105 call, right? So when it was 105, I was thinking about, well, it's getting close. Maybe I should buy a stock, but then maybe I should wait. And you have that sharp reversal. You have that sharp reversal in Starbucks. So that was a good decision, and I, closed the put and the call. All right. Any questions in terms of other positions? So CCJ, we talked about CCJ, still uptrend on the long-term charts. So I'm still long CCJ. EWJ, still long EWJ, continues to go higher. These guys, earnings strategy, I'm out. QQQ. So 400, 410, obviously after today rallied. So I'm still at probably 50% loss. 430, 420 is now very profitable, right? It made a big move, right? So let's look at QQQ, how well it's hedged, to what level. QQQ, negative VANA, right? Negative VANA, people are selling puts, buying stock. Next big strike is at, what is it, 416? Well, 416 is nothing. Let's see, what is this guy? 414. That's 1%. So these are weeklies. Okay, let's look at monthlies. February 16. Okay, February 16. So a lot of positioning at 360 level. So probably not going to get to 316. That's 10% drop. And a lot of hedges at 405 and 400. So about 400, 405 is where where bulls and bears going to meet, right? And most likely bulls are going to win. 405, 410, yes. So probably we can squeeze maybe another 1 or 2% on QQQ, right? If it drops another 1 or 2%, based on the VANA flow and how much people are positioning, you're probably not going to break this wall, right? When bears are not going to break this wall, right? So, and that corresponds to the technical analysis, right? So if both of them say probably not going to break, then then that's probably what's going to happen. So I would be a buyer of QQQ at 410, maybe even hedging, right? Because I have 2 contracts. I mean, it may or may not go that way. So actually, now that I'm thinking about, let's maybe close the digital. What is the score? So I still have 410, 400 in case it continues to drop, but 430, 420, I mean, $1.70, it's 50% profit. 50% profit, I should take it, right? And, it makes sense to use dollar cost average and continue. So 525. So I'm going to close 420, 430. If it rallies back up to the highs, okay, then I can put this trade on again, right? If it continues to deteriorate, well, I do have a hedge for 400, 410, right? You just don't know, right? In theory, rates are going down, QQQ should reverse, right? Especially if Apple and Amazon has positive earnings, you can have a big rally, right? Because we are approaching, this VANA flow, right? We are approaching this level. I mean, granted, you don't have a lot of support until 405, 407, right? 405, 407. This is probably at the money, so that doesn't count. Yeah. Four, 5, 410. Yeah. So probably to 410. But again, that depends on the other data. Okay. So I close QQQ. Let's put that order. All right. Thank you, John. Doing well. Fly consider version to mean for the rest of the CP for but big test with a new Apple and others major spin. Right. I think at least right now it doesn't. It looks like everybody's positioned to defend this, right? And this is 50-day moving average. Usually 50-day moving average has been a great support, right? So, I mean, depends on the today and Friday's unemployment data. I mean, we could be at all-time high or we could be at 410. But at least as of right now, it doesn't look like we're going to break 410, right? Based on positioning and, how much supply and demand there is. Being able to see that just looking at the open interest seems just as simple. You could look at open interest. The reason I like it because, you have to manually go from each strike and do the aggregation, right? So this basically a chart of at each strikes, what is the open interest, and it shows you, positive skew or negative skew. Because a lot of interest mean people are buying calls, right? Like AMD, or like in Apple, they're selling calls, right? So this gives you idea of how people are positioned. You can get that from your regular option chain page, right? So the big difference here is this weighted volume skew. And it gives you an indication. It's not 100% certainty, but it basically says that it looks like there are more buyers of calls, right? In this example of QQQ, it's the opposite, right? It's the greater than 0.5. So these front months, people are selling the puts, buying puts, positive, put skew, meaning there are more demand for puts than calls, right? There's more demand for puts than calls, and people are buying puts and selling calls. Closing my 430, 420 put spread, right? So I closed it, and then I do have the other. So I'm still hedged, right? But 2 contracts on $10,000 account, that's, I think, aggressive, right? Each contract is $30,000. 1 contract, that's okay. Spiders is below predicted low. Yeah, so looks like market. I mean, this is, it's a big gap. We are below this trend line. The uptrend was broken in the beginning of January. We reached the uptrend, we're pulling back. Right now, there's really no support until 410, right? Based on the dealer positioning and based on just regular technical analysis, right? If you look at the, let's see, stock forecast toolbox, let's look at neural networks. They're a great tool. What do they say? 420, so short term, I think 420, right? Negative trend, 420. Model is doing a good job. I like that. And basically saying in the next 10 days, don't be surprised if the market is at 410. Don't be surprised if the market is at 430, right? So that's your range. So that's good, right? All stars align. Neural networks align. That's completely different algorithm. Dealer flow aligns. That's a completely, different algorithm. So that means that you need to, this is all just distribution of probabilities, right? Doesn't mean that 410 will hold. 7 out of 10 times it will, unless there is new information, right? A new momentum where Powell or unemployment data or Apple earnings will create some kind of a new information that nobody expects, right? Negative surprise. Then these, obviously these models, only as good as, data it's being trained on, right? So if there's new piece of information, new data, well, we need to adjust. Thank you, Mario. Ricardo, who just died, not sure what that means. Seems like he. This is because you're dealing at market now limits. You're at trades. Ian, I'm not. I mean, you can open up account with Trader. They do have good executions. Obviously you get text messages because this is a trade that gets filled. The reason you see in here and you get your text messages because unlike other, services, these are trades being executed on exchange. I don't send a tweet, okay, I think I'm buying 420, 430 put spread, in my Twitter handle. You actually see live trades in my account, right? They're not delayed. This is not Excel spreadsheet. This is not a Twitter, right, where you get trades every 5 minutes. A lot of people complain to say, Vlad, why you only have 5 trade ideas, not 20 trade ideas? I mean, you get bombarded with these trade ideas, then you have to make a decision which trade to make. I'm showing you what I'm actually trading, right? I mean, I have millions of ideas. You can be overwhelmed with how many ideas these networks generate, but they become useless unless you're a professional trader like John, and you can basically decipher through these signals and just say, listen, I like LA Lilly, but I don't like Starbucks. But if you don't have that, knowledge or experience, then, it's very difficult. I think that's what the advantage of Tradespoon and Yellow Tunnel. All right. Ian, thank you. Fred, PMI 46 versus estimated 48. Do we have a PMI data today? Oh yeah, PMI data 945. So continue to do 46 versus 49. This is what, 945, 845. So is this when it start deteriorating? Let's look. I mean, it was down before that. Let's look at 845, 845, right? Chicago time, 845. I mean, if anything, it's stabilized, right? If anything, it's stabilized. So I think the biggest drop was, pre-market session, 7 o'clock in the morning. I mean, one data point that I did, there are 2 big data points. One is the quarterly treasury balancing, right? Which it went well, but they did indicate that, they're going to, they need to find, government has to finance their debt, and this is a record of issuance going to be in February. In theory, yield should have went up, but it went down, right? The other data point was inflation from France and Germany, which was significantly lower than expected. Ricardo, February 1st. Okay. Google is rebounding nicely. Okay. Not sure. Maybe at some point, but it looks like toward the session low. So Google still looks weak. GSK is up. MA. Yes. So MA. Thank you for reminding me. Yeah, MasterCard is important. Right. State of consumer. Right. We're a consumer-driven economy. MasterCard, AXP continue to. So nobody's worried about credit card defaults. It looks like it's contained, right? And people are spending. They're still traveling. Flights are booked. Even though I saw jets just kind of falling off the cliff. Oh no, maybe it was a misprint. No, jets are actually up. Okay, so that's good. So MasterCard. Yeah, NVO, right. So we're talking about NVO and LA Lilly. I'm long, right? I'm out of LA Lilly shortly, but NVO continues to grind higher, which is good. Ricardo, Shop versus AMD. I mean, Shop has earnings, right? When does it have earnings? So from technical perspective, I like it, right? It broke through this long-term trend, right? Kind of clear this overhead resistance. You have your stop loss, right? If it drops below 70, I'm out. On the upside, I mean, it could continue doing the catch-up trade, right? So a lot of it depends on earnings. Like, I don't know what the earnings are going to look like of the Shopify, but earnings aside, assuming there is no big positive or negative surprise, it's a pattern of higher highs, higher low. So if I structure the trade below 70, I would be out, and the sky is the limit. AMD, obviously for now, it's still down, right? Still down. It's overbought. 158. It's still negative skew, right? So it doesn't matter what I think, right? It doesn't really matter what I think or what Ricardo thinks. What matters is that it's still a negative Vena. So at least as of right now, the animal spirits are still alive. People are selling puts and they're buying calls, right, in pretty large volumes. So, you know, and it's right at that strike price. So the good news is that you can go long AMD, same thing. If it drops below 158, right, if it drops below 158 or, you know, I would say 150, I would get out, right? If it drops below 158, 150, I'm out, right? Because there is no strikes and it could be a free fall, right, with negative VANA. Negative VANA acts as a repellent. But that's your stop loss, and you know, people just like AMAT, right? AMAT had bad earnings, right? Right, it dropped, and look, I mean, it's straight line up, right? So just because earnings missed the estimates, that doesn't mean, you know, that the stock is not going to go up. So there are still macroeconomic conditions are at play, right? If we're going to have Treasury continue to rally and QQQ continue to sell off, that could be a problem, right? But you all have, you know, I would only do this as a trader, right? Kind of put my trader's hat on, look at the support resistance, you know, okay, 150. You can say, okay, if it drops 150, I'm out, right? Or 160. Well, AMD, let's look weekly. Probably weekly, you know, 150, I would be out basically. If it drops below 150, I'm out. So you have 15 points to the downside, and you know, potentially, if you know, soft landing narrative persists after today and Friday's announcement, then you can be long. Thank you, Ricardo. Long-term Sharp versus AMD, I think generative AI is the way to go, right? I personally think Microsoft is a better trade. You know, they already had earnings. There was nothing wrong with the earnings. They continued to grow, you know, at 30% their cloud computing, you know, building data centers, selling, you know, AI add-ons to their, you know, Office products. Can they pull back? Sure, but there's nothing wrong fundamentally. AMD, you know, they were supposed to deliver, you know, on the guidance, and they didn't, right? They think they're going to slow down in the first quarter. Well, that's not good, right? That's not good. So I would be long Microsoft, right? Clean breakout. If it pulls back, only because of macroeconomic headwinds, but you know, long-term Microsoft is probably the best, you know, AI play as of right now. Okay, thank you, Kevin. Kevin, thank you. All right. Sorry, guys, took a little bit longer. A lot of information to cover, a lot of earnings, and now I have this VANA flow, which I have to realize it takes me a little longer to do all this. But I think it's a good piece of information, another entry point into your trading decision. It's useful. All right, you guys been great. Thank you for your time. I will see you. Scott will do the closing bell. I will see you tomorrow morning. And please, if you like the content, do me a favor, try to get a tradier clock, right? It will, I just put a link. It will help you make these trading decisions. All right, thank you very much and have a great day.